So lately, Palantir has been falling off a cliff. Well, not just Palantir, but the whole market is. And if you happen to be a stockholder or a shareholder of Palantir, you're probably feeling like Wojak right now. I know I am. And despite every other YouTuber telling you just to buy more, hold, don't worry about it, it gets really frustrating to see that the next day just hits another record low. I mean, how low can this thing get? But the real question is buying right now a good time? Or should you wait? That's what this video is hopefully going to answer, because hey, it's just a prediction. Hey guys, welcome to Curious Pejjy, and I'm curious. I'm curious if Palantir's $15 stock price is a good buy right now for the next 5-10 years and onwards. I did a poll recently what stock video you guys want to see next, and a lot of you guys asked for Palantir, and I'm not gonna lie, Palantir is a tough one. So as usual, after researching and putting a lot of hours into this prediction, I made an easy, well, hopefully easy and understandable chart and graph that will predict the stock every single year up until 2030. And to be quite honest with you, this was pretty difficult to do because it's very hard to predict a stock price of a company that's not profitable yet. So do me a big favor and smash that like button, because this prediction took me almost a whole week to do just to get all the formulas right and everything. It took a while. So I would really much appreciate that like. Now, before we get into it, as usual, there are a few disclaimers that you should know. Am I a financial advisor? No. Can you rely on this video in making the choice to buy a Palantir stock or not? I would say maybe. Usually I would say yes, but in this video is going to be a maybe. And that's because there's a lot of speculation, there's a lot of guessing, and because the company is not profitable, it's going to be very difficult to figure out what the stock price is going to be. We have to go all based what feels right and everything. Again, it's a prediction. It's not a forecast that's going to happen. It's a prediction. So I would say maybe. More research is always needed. Can you guys use this video as research on Palantir? I would say yeah, but more research is always needed. So do more research. Do I own any Palantir shares? At the moment, I own about 100. I am down about like a good 40%, but I intend to hold this for the long term, and we will see exactly what the long term is going to gift us. Should you guys like this video, as mentioned before, I really appreciate if you guys can smash the like button. I worked really hard to get this prediction out, so I really appreciate that like. And if you subscribe, will there be more videos like this? Oh hell yeah, man. I love making these videos. I love making these prediction videos, getting deep into the company, looking at the background of it, see if it's a good buy or not, and just overall looking at the fundamentals of the company. Absolutely, man. Although I have other cool things coming on to this channel later on, but stock prediction is going to be one of the main things on this channel. So yes, as well as comment down below what company should I do next. Who knows? It might be next. So Palantir is a unique software company that focuses on big data analytics since 2003. So they've been around for some time. Compared to their competitors, they offer highly secure data. In fact, so highly secure that the US government, including the Army and the CIA, uses them. It was actually the help of Palantir that they found Osama bin Laden back in 2011. So that's some impressive stuff. Although all this sounds very impressive and awesome, how is this going to make us money for investors? Well, as of recently, Palantir's future plans include going into the commercial business, being big data analytics for big companies, rich companies. And that's where it gets very interesting for us investors. You see guys, Palantir's software is one of a kind. It's extremely unique, never seen before. Not only that, it's so trusted that the government relies on it. Not just the government themselves, but their allies as well. So you already know that this software is one of a kind and it's extremely unique. With this uniqueness, it's Palantir's competitive edge. So there's no doubt that companies and commercial space that Palantir will be part of, they will benefit greatly. And we can see it here. Almost for the past year, Palantir's revenue has greatly increased in the commercial sector. Over 100% to give out some numbers, which is great news and the right path to profitability. In fact, for the past 3 quarters and the one coming soon, they've been cash flowing, which is a very good indicator. Now, to dive deep a little bit into Palantir, this is the platform softwares that they have. The first one is Palantir Gotham. They're probably from Batman or something, I don't know. But this one focuses on analytics at defense and intelligence agencies. So this will be used for the government sector, you can say. The second one is Palantir Foundry, which is for commercial commercial businesses only. And the last one is Palantir Apollo, which is pretty much a software as a service software that continuously delivers systems that manages the other two platforms. At the moment, Palantir Gotham has the most of the pie due to the high activity in the government sector. But as time goes on, we will see Foundry taking more and more market share because they'll be expanding and growing into the commercial sector. Honestly, Palantir has a really sick product and service. All they need to do now is scale up by getting more businesses and more customers. And the more the customers they get, the sooner they will be closer to profitability. And the closer they are to that, the closer to the moon the stock goes. It's really that simple. Now, does that mean we should go all in? Well, let's find out. Alright, so this is the Palantir stock chart prediction chart that I made here. And if you guys have followed me, if you guys are returning subscriber, returning viewer, you will know things are a bit different here. It's more complex because again, Palantir is not profitable. So we have to figure it out how much they're going to keep losing and when is the break even and then when are they going to, go to the moon and figure out the PE, price and sales. You will see it all here. It gets a little complicated. So back in 2019, the total revenue was almost 750 million, with the net income being almost 600 million. But in 2020, it was about 1.1 billion in revenue and the net income was 1.2 billion. Loss, not income, it was loss. So they're losing a lot of money because their operating expense is really high. Nonetheless, they are a growth company, but let's keep moving forward. The share price in 2020 at the peak was at almost $28 per share, with the shares outstanding being 1.7 billion, just a little bit over that. This gives it a market cap of almost $49 billion with a price to sales ratio of almost 45. EPS was a negative 0.66. 2021 is about to come to a close and quarter 4 is not out yet. So what I did was instead I went to Simply Wall Street. They have the best predictions. All revenues and net income I took and I put it into formula over here. And as we can see in 2021, it's going to end with $1.5 billion in revenue, just a little bit over, with the net income being $500 million in negative, which is a very strong improvement from 2020. 2022 is going to be near $2 billion, which is absolutely amazing, but a net income is going to be 242 million. Although it's at a loss, it's still better than the year prior. And so on to 2023, where the sales are going to be 2.5 billion and the net income is going to be at almost at 150 billion loss, which again is a whole lot better than the year before. So they are improving, which is very nice. All right, now that we have a base to work on, the foundation to work on, to see how we can expand this, we have to focus right now on the shares outstanding because this is a key player when it comes down to the stock price and the evaluation. So when we look at the shares outstanding, we don't have that much of a data because they did IPO literally less than 2 years ago. So it's really hard to get some data, but we're gonna work with whatever we have. I took all information from 2020 all the way to 2021, and this is what I got. On an average quarterly basis, they were diluting or selling shares at 61%, which is just absolutely crazy. But on a yearly basis, they were doing it at a 21% rate, which is still extremely high, but better than 61%. But here's the interesting part. When we look at it at a quarterly basis for the past couple quarters, it's only been 3%, 4%, 4%, 3.6, 3.2 has been around there. So it looks like they've been more stable and maintaining recently, but I like to be conservative, and I'm going to say that every single year, they're going to dilute 10%. I'm not going to say this for the whole entire year. I'm just going to say for the next 3 years. Once you put that into the formula, by 2024, we get just over 2.5 million in shares outstanding, which is quite a lot of shares to be outstanding, to be honest with you. Finding the price to sales ratio is important here for a company that's not making any profits, because that's how we can figure out what the stock price is going to be based on the revenue, and that's what we need to figure out. So right now, at the current moment, the price to sales ratio is below 20. I believe right now it's at like 17 or 18 because the stock price is taking a big nosedive because of all the interest rates and all the fears that's happening. So I'm going to say that in 2022, I'm going to give it a 20 sales price to sales ratio. I think that's fair. And I'm going to do that for 2022 to 2023 to 2024 to keep things conservative. If this numbers increase, then the stock price will increase as well. But let's keep it at 20. With the price to sales ratio, we can easily figure out the market cap, and the market cap in 2022 is going to be $40 billion, almost $40 billion. Now, once the market cap is figured out, we can easily figure out the predicted stock price, and the stock price in 2022 should be averaging around 18.5, as we can see here. We can also see here that the EPS is also a negative 11, which is better than the year before, much better than the year before, but it's still a negative. Now we figure that out, we can do the same thing to 2023, and in in 2023, the stock price with all this data given should be $21.50 averagely, which is kind of depressing, I'm not gonna lie, because my break-even point is at $24 per share, man. So if I'm not gonna make my money back by next year, that's pretty sad, I'm not gonna lie. Now, because we don't have data from 2024 all the way to 2030, we have to take this in our own hands. I couldn't find anything online. So as usual, we're gonna do this our own, and that's why you are here. So let's get digging, let's get our hands dirty, and let's get down to this prediction. So I made this chart here that focuses on the revenue and net income, showing what year-over-year growth is. This is important because it'll show us what we can rely on for the coming years that we don't have data on. So we can see here from 2019 to 2020, it was almost a 50% growth for revenue, and then a 40% growth, and then a 30% growth. For net income, however, there was a 100% increase in the negative. Obviously, that's not a good thing to see. But then there was a 41% decrease in the negative. So that's good. We want more decreases so we can go into profits, then it can increase. Then it was a 51% increase after that. And a whopping 60% after that, which is honestly pretty darn nice. But I'd like to see more data on the revenue and profits. So what I did was that I went back from 2018 all the way to 2021, and this is what I got. From 2018 to 2019, there was a 25% increase in revenue or sales, but a 0%. I mean, it didn't move at all. They lost money, but that didn't increase, which is a good thing. But in 2019 to 2020, there was a 40% increase in sales and revenue, while there was a 102% decline, which is just insane. That's crazy. And then from 2020 to 2021, there was a 40% increase in revenue and a 60% decrease in the net income to 475, just as we saw, which is a good thing. Overall, when we put that together, there's a 43% increase for sales and revenue and a 21% decrease, you can say, like it's getting less for net earnings or profit, which is a really good thing. Now, knowing all this, I like to take things on a very conservative approach. So in 2024, I said that they're going to grow for revenue at a 40% increase. That'll give us an increase of almost $3.5 billion in sales. So on to 2025, another 40% on top of that, making it a $5 billion revenue. But in 2026, to keep things conservative, I said they're going to increase by 30% rather than 40%, and that brings it up to $6.5 billion. So on and so forth to 2027 at $8.5 billion, which is honestly not bad. That's actually pretty darn nice growth. But in 2028, I became more conservative and I said they'll grow at a 20% rate instead. And this gave us an over of $10 billion in sales. And in 2029, it was about $12 billion in sales. And in 2030, it was $14.5 billion in sales. And by looking at other people's predictions, this seems to be aligned, even though I'm not going based on their predictions. I'm just going based on what feels right. So I think that $14.5 billion by 2030 is legit. Overall, from 2024 to 2030, year over year, they're growing almost at a 27-28%, which I think makes sense. Let me know if you guys agree, or it should be more or should be less. Let me know in the comments down below. But we're not done just yet. We gotta figure out some other important keys, and let's get down to that. Now, going back to 2024, I'm gonna put the price to sales ratios to 20. Because we're going to keep it 20 all along. We're going to take the worst case scenario and be conservative, even though if this number increases, it's in our benefits. But to keep everything safe, I'm going to say 20, and that gives us a market cap of almost $72 billion. And that gives us an average stock price of $27.30, which honestly, it could be better. But again, if the price and sales ratio increases, this number will increase as well. All right, now we're ready for the fun stuff. We have to figure out the net earnings and kind of guesstimate here a little bit to see what works best. But all we got to figure out is the earnings, and the stock price and everything will follow along. So in 2024's net earnings, what I did was that I took the same rate in 2023 to 2022, which was a 60%. Instead, I said 65%. They're gonna do better in 2024, and that gives us a negative $51 billion in losses, which is really good. And that gives us an EPS of $0.02. Which is good, better than the year before. What I did was that in 2025, in net earnings, I took you guys' advice. You guys said 20%. I made a poll recently on my channel, and you guys said 20% year over year. Palantir is gonna grow their earnings once profitable. And so what I did was that in 2025, I was really conservative, and I said that they will grow 20%, but I'm gonna say from third quarter and onwards, which is why I'm going to divide it by 2. So we get here $500 billion in net earnings. If this was a solid 20%, this would have been $1 billion. But because we're going to say half of it is not going to be profitable for whatever reason, we're going to say $500 billion. At least the other 2 quarters should be profitable at a 20% rate, which is by 2025, they should be making a good profit and we should see the stock price rise. But let's figure this out first. I took your advice and I took the 20% year over year and I dragged it all the way to 2030. And by 2030, we get close to $3 billion in net income. Now I'm going to go ahead and hide these rows because we kind of don't need them now since we have a profit. Now, since we are making a profit now, I believe that Palantir will start reducing their dilution of outstanding shares. And I put for 2025 a 5% increase, and then 2026 a 2% increase, and then by 2027 a 1% increase, and then 2028 all the way to 2030 they're going to buy back 1% of shares, which looks reasonable to me and logical that they should buy back some shares once they're making a whole boatload of money. So usually when a company becomes profitable, the stock price booms. Look at Shopify, look at Tesla, look at all these other tech companies that just boom when they're making a profit. So I'm going to be conservative and say that for 2025 the PE is going to be 200, and then 2026 is going to be 150, and then 2027 is going to be 125, and then 110, 190, because a PE has to come to reality. It has to be reasonable. And by doing this on a 20% rate return, by 2025 the stock price should be $36 per share, with the market cap being $100 billion. By 2026 the stock price should be $70, with the market cap doubling there, almost at $200 billion. But in 2027 is going to be $75 at a market cap $211. 2028 is going to be $80 at $223. 2029 is going to be $88 at 250 at $240 billion market cap, and by 2030 is going to be $96 per share and a market cap of $260 billion. Now, this is the 20%, right? The 20%. Let's go on and see the 30%, 40%, and 50%, and you guys can be the judge. Now, putting 30% into the formula, by 2030, the net income should be over $4 billion, almost reaching $4.5 billion in net income, and the stock price in 2025 is going to be $55 per share, with market cap reaching $150 billion per share, which is just insane. 2026, the stock price will jump to 105, so even double that almost, at a market cap of almost $300 billion. 2027 is going to be $112 per share, with the market cap being $316 billion. 2028 is going to be $120 per share, with the market cap being $330. 2019 is going to be $132 per share, with the market cap being $365 billion. And by 2030 is going to be $144 per share and for almost $400 billion in net income, which is just absolutely crazy. But let's see what 40% looks like. Putting 40% into the formula, by 2030, they should be making almost $6 billion in net income, which is absolutely nuts. But here's the stock price. By 2025, it's going to be $73 per share, with the market cap reaching $200 billion, which is just amazingly insane. By 2026, it's going to be $139 per share, with almost $400 billion in market cap. 2027 is going to be $149 per share, with the market cap being $422 billion, then $160 per share by 2028, with the market cap being almost $450 billion, which is just insane. And then 2029 is going to be almost $180 per share, with market cap reaching almost $500 billion. And then by 2030 is going to be almost $200 per share, above $500 billion, which is just insane. But the last one is going to be 50% return year over year, just like what Simply Wall Street is saying, which is insane. Although they are doing that now, but I'm not too sure if that's going to be the case in 5 years. But let's see what happens. By 2030, they should be at over $7 billion in net income, which is just out of this world. It's just crazy. That's telling that 50% of entire revenue is going to be profits. Is that reasonable? Maybe for the first couple of years, but for 5-6 years straight, that I don't think that's possible, unless you're Tesla right now. But for Palantir, I don't think so, man. Comment down below what you think. But here's the stock price. 2025 is going to be $91 per share, with the market cap reaching $250 billion per share, which is insane. 2026 is going to be $174 per share, where the market cap might hit $500 billion by 2026, which is just absolutely mad. And then 2027 is going to be $187 per share, with the market cap reaching $528 billion. 2028 is going to be $200 per share and market cap reaching $560 billion. 2029 is going to be $220 per share, with the market cap reaching over $600 billion. And 2030 is going to be $240 per share and the market cap reaching $660 billion, which is just absolutely crazy. I personally don't think they're going to reach this by 2030, maybe by 2040. All I'm going to say is that Palantir's year is going to be in the 2030s. Right now, I think they're going to have some good momentum. I think 20 to 30% makes more sense here than 40 and 50%. But once 2030 hits, because they have a good foundation and they're making good money and profits, it's going to be a similar story to Microsoft with their earnings and income. Strongly believe in that. And here's all the charts for 20%, 30%, 40%, and 50%. What's very interesting here is that it's all the same shape. We will have a year for Palantir that the stock price will just go to the moon because they made a profit and the hype will start, just like how Tesla was and Shopify and all these other companies. So Palantir will definitely have that year. Could it be 2025? Will it be 2024? Will it be 2026? We don't know. It's all a prediction. And again, this is only a prediction and a prediction only, nothing else and nothing more and nothing less. So take this as a grain of salt. Don't take this that, oh my God, by 2030, my stock price is going to be 240. Unlikely, it's not going to happen. It's not going to happen, man. I'm just going to tell you that if that happens, I don't know what I would do, but this is honestly unlikely that it's going to happen. But take these scenarios, look at them, do more research, and always do your due diligence. This is only a prediction, nothing more and nothing less. Now, there are some concerns circling around Palantir's revenue. Everyone keeps bringing it up. It's the fact that 50% of their sales and revenue is coming from the government sector. Yes, I do agree that it's a concern now, but as long-term investors, we already know that they're expanding out to the commercial sector, and that's going to become more and more of their market share as the year goes on. So honestly, this idea of being concerned about 50% of the revenue coming from government, and at any given moment in time they can pull out, although it's unlikely because they've been in the business for almost 20 years with the government, it's not that much of a big deal because again, they're going into the commercial sector. They're growing their business that way. So I'm not really concerned about that now. Unless you're a short-term investor on Palantir, then yes, I would be concerned. But if you're long like I am, or pretty much like how you are, we should not be worried at all. Another concern was that the company was trading at a high valuation at $30 per share or $35 per share. Recently, again, $50 a price to sales ratio is actually quite insane. But you have to understand that this was built on a lot of hype. And obviously for a company that's not making a profit or revenue, it's really hard to see where the stock price is going to be. Although Alex I don't know how to say his last name properly. Although he said himself that they should be valued 20 times more, it's hard to see that now because 50% of their entire revenue is coming from government sector. So that makes sense. But that's not a concern anymore because the stock is hitting record lows at $15, $14.50. So not a concern anymore. And if you're thinking to buy more and you're long on Palantir, it's probably a good time to buy, I'm not gonna lie. All right, conclusion. Should you buy Palantir stock? Should you go all in? Recently, Palantir bought $50 million worth of gold to fight against a black swan event, and honestly, it's kind of sus. Since they have a good connection with the US government, it asks the question, what do they know that we don't? Alex Karp did say that we will have COVID waves events happening in the future. Just watch this.
It's too dangerous to think of the world the way it is. People run and hide and service their institutions in ways that will not work. And the COVID pandemic is just the first of many like waves we're going to see.
He's not lying, but damn. I want to be when a black swan happens. I don't want to freaking live in depression or recession or all these things. I want to be able to have a higher hand. And that's why Palantir sees this, and that's why they purchased $50 million worth of gold. Raw gold, not stock or anything, actual gold. Another way that you can see this move is that they have more than enough current assets to pay off any debt. So if bankruptcy is your excuse for not investing in Palantir, well, I just shut it down. Knowing all this, should you go all in? Personally, for me, I'm definitely not going to go all in, but I am going to buy bits and pieces of Palantir here and there. It's a 10-year hold investment at least, so be prepared for a lot of volatility until they become profitable. But one thing is certain, long-term, Palantir is going to do really well. They're already cash flowing, money's already coming in, their net income losses are getting less and less every quarter, and that's really something that we should look at this quarter coming up. And honestly, it's a juicy price right now, and I would dollar cost average if you have the cash for it. In 5 years time, 10 years time, 20 years time, Palantir is going to be a much bigger company than it is today. But there you have it, guys. Palantir stock price by 2030. We did a 20%, 30%, 40%, 50%. Comment down below letting me know which one you guys think is more reasonable. 20%, 30%, 40%, 50%. I want your thoughts. Let's get talking, man. I want to see what you guys think about Palantir. I hope you guys enjoyed this video and found value. And if you guys did enjoy it, check out this Palantir video here. Everyone enjoyed this video, and you will too. Check out the Google one and the Tesla one. There's gonna be an update on that the next video because earnings are coming out, and that's really exciting. So check it out. Don't forget to subscribe, guys, and I shall see you guys in the next video. See ya.